Hello everyone and welcome back to the channel. My name is Brent, and in today's video we're going to be doing a very quick M1 Finance stock market dividend portfolio recap of the week. We're going to go ahead and be covering the dates from the 7th to the 11th of February 2022. We're going to go ahead and hit 5 areas: the overall performance of the M1 Finance dividend portfolio. We're going to go ahead and go into the weekly performance of the portfolio. Number 3, the activity. What stocks did we have dividends pay us? What stocks paid us dividends? What stocks did we buy? Did we sell anything? We're going to go ahead and cover last week's activity. Number 4, we're going to go ahead and cover the portfolio's current income. Go ahead and update it, showcase how you guys can track your own portfolio's dividend income on a weekly, monthly basis and such. And also, we're going to go ahead and cover what stocks we're planning on buying this week here on the marvelous 14th of February 2022. Happy Valentine's Day, everyone. So let's go ahead and get into the video. So jumping over into number 1, jumping over into the M1 Finance portfolio, let's take a look at the overall performance of the portfolio. So overall, we're down slightly over last week. We're up 64.62%, and that's completely fine. The market pulled back, our portfolio pulled back. We're moving with the market. Nothing is out of the ordinary. So let's go ahead and cover what were the three, what are the current 3 positions top tier. We have Apple, Lowe's, and Main Street Capital. Those have remained the same. Now down towards the bottom, we have some new positions in the red. So what are the 3 worst positions in the portfolio? We have Clorox down roughly 23%, Merck down 0.61%, and Digital Realty Trust up 1.39%, but it is much lower versus where it had been overall. At one point, Digital Realty Trust had put on like a good 20-30% gain, but then it pulled back. And we can actually check this right here. If we just look at this here, it had like a nice little gain right there for a while. The only reason it looks like this is because I added equity into it. It looks like I added $1,000 into it, and then as of that time, it's just been kind of trailing back. So, I'm buying me. You guys buy for you. Don't follow my investment buys for sure. Just buy what you generally buy, as would anybody here on YouTube. Don't follow anybody's trades on YouTube, right? You're investing for yourself. I'm investing for myself. I'm just kind of showcasing exactly how, what I'm buying, kind of why I'm buying it, along on our journey. This is a 4-year-old journey now. 4 years now here on M1 Finance. So we're just kind of tracking the whole journey of this portfolio. So that is the overall performance of the portfolio. Now, number 2, the weekly performance. Again, if you guys are brand new here to the channel, you guys are enjoying the dividend style investments, you guys like, dividend related content, stock market related content, definitely go down below, hit the red button to subscribe, make it gray, hit the bell to be notified whenever we release a brand new video, usually on a weekly basis. Let's go back into the video. So the Roth IRA on the week is down 1.04%. Now you might say, dang, 1.04, whereas the S&P 500 dropped a whopping 1.82%. It lost a lot of steam here on Thursday and Friday, putting it down almost 2% on the week. The Dow Jones, however, lost about 1% on the week. So we set right around the Dow Jones performance. That's usually where we sit. We are actually fairly, it's a completely dividend-driven portfolio, so the volatility of it and the pullback performance sometimes isn't as hard as the S&P. So we kind of bounce between the S&P and the Dow Jones as far as performance goes. And then we had the NASDAQ do a bigger pullback here of 2.18%. A lot of that has to do with like Tesla, Facebook, the FANG stocks and such pulling back pretty hard. The only index that really put on a gain here of the main 4 is the Russell 2000. This is your small mid-cap companies. It still lost nearly 2.5 points on Thursday, Friday, but it had made such a big move up on Tuesday and Wednesday that it still ended on the week up 1.39%. It is still in last place as far as year-to-date performance. The NASDAQ is in worst place year-to-date, down 11.85. Followed right behind by the Russell 2000. Then we have the S&P 500 down 7.29, and we have the Dow Jones down 4.0%. And I think that's how much we are down actually off our high. We can see here, we did pull back slightly about, we were at a high of about 43,000. We're now at about 40,832. So close to 41,000. We're down about $2,000 off our highs. And that's really not too bad overall. So that is the 1 week performance. As far as the best performers on the week and worst performers, our best performers were Cisco Corporation, ABM Industries, and Hormel Foods. You know, people moving into some of the safer companies such as Hormel Foods, you know, food distributor. Cisco Corp actually food delivery. They deliver food to like a bunch of restaurants and chains. They're actually kind of popping. You can see money kind of floating in. Clorox, you know, that's finally kind of bouncing. That one has been on a downtrend for quite a while, so we see that kind of beginning positive. Avi, JP Morgan, WP Carey, these are all, you know, this is a REIT. Kind of interesting to see with the inflation number of 7.5% kind of floated up by the Fed. That REIT, this REIT right here, actually doing pretty positive on the week. So I'm going to go ahead and add that into my little chart here. And I would like to take a look at WP Carey here just in the short term. And yeah, our worst three positions on the week are UGI. This is a utility company. Kind of interesting to see them take a 7% dive on the week. Digital Realty Trust down 6.11 and Pfizer down 4.19. Now, Pfizer could be an interesting time to take a little bit of profits right here. Oh, not anymore, it looks like. You know, it would have been a really good time to take a buy. Oh, that's Meta. How did I punch in Meta? There we go. Pfizer. Okay, they're still off their highs. They're in that $50. They have some support here. So may not be like a good time to sell because you don't really know if it'll kind of hang at that $50 point or if it'll kind of hit the 200-day moving average and kind of bounce up. But it does have these little dips. This could actually be a good opportunity to either buy a little bit more or just kind of hold off and wait to see what happens. So I'm not going to do anything with Pfizer myself. So let's jump back over here. And those are our three worst performers on the week. Now, number three, the activity for the past week. Let's go ahead and bring in our handy dandy calculator. And we'll go ahead and cover the dividends on the week. We can see here on the 7th, that was Monday, we were paid $4.90 from ABM Industries. On the 10th of February, we were paid $3.74. And on the 11th here, we were paid $12.60 from Clorox to make a whopping $21.24. That's pretty good on the week. And then we deposited capital on Friday of $127.66. We're going to deposit $127.66 for the remainder of the year, dollar cost averaging into the market regardless of what the market does. Does it go up? Does it go down? It doesn't matter. We're going to be continuing to buy. And our total for the week that we're going to be investing is $148.90, and that is correct, $148.90. Now, as far as our buys, if you guys were here in our last video, we did buy Stanley Black & Decker right here for $135.56. The great thing about M1 Finance is you are allowed to you are able to buy fractional shares. So even if I couldn't afford a complete share, I could still invest the $135.56, buying up 0.83 shares of this company. So that's great thing about M1 Finance. So if you guys are interested, haven't checked out M1 Finance in the past, you guys can check it out. I have a link down in the description below. And that is our only buy for this week. There were no sells. Now jumping into number 4. Okay, in order to track our dividends, we're going to go ahead and head over to trackyourdividends.com. Now, our current yield is 2.76. Our yield on cost is 3.25. The portfolio is currently paying out $1,124. So we're right on the button. You know, we're over that $1,000 hump. Now we're just kind of continuously adding into our portfolio on a weekly basis, and this annual income is just going to continue to grow and grow. So that's where we're at as far as our current portfolio dividend income. Now, number 5, what stocks are we buying? Now, this is where it gets kind of interesting. We did have like this nice pullback here in WP Carey. It looks to be, potentially bouncing on the $76 range. It has already broken through the 200-day, 50-day moving average. But if this kind of stays in this downtrend, rising rates, that hurts rates pretty hard. So this could just be a waiting time. JP Morgan's going to actually benefit from rising interest rates. We can see that the share price has been climbing out of this hole right here. It looks to be bouncing and hitting a sky, that 50-day moving average. It had some resistance, and actually bounced off. We zoom into the 1 month here. You can see it happened right here. Went low January 24th, so I'd have a bit of a pickup, and then it bounced right off the 50-day, showed some resistance, bounced off, and it's kind of trailing down. It'll kind of wiggle up in this room again. It could retrace back down near the 140s. It could try and break above 156, but this has to basically break above and close above 156.75 to show support. So we'll kind of hold off on that one as well. Stanley Black & Decker. This is one that I had purchased here in the last week or so, and it's been kind of downtrending, but we can see here it hit this 160 mark. It kind of bounced, hit, and fell back down. I don't know if I would buy this one at the moment either, right? The one that had kind of caught my eye earlier was Merck. This one actually had a nice little pullback, but I wouldn't call this like undervalued, right? It is just having a bit of a pullback. It's actually breaking below. We see the 50-day cross onto the 200-day moving average, and that could actually be, negative for the position. That's the death cross. When your 50-day, your short term goes underneath the long term, that could just be a potential like negative for the company. So right now, I'm not planning on buying any more Merck at the moment either. For this, I'm actually going to go ahead and look over at Seeking Alpha. Check a look at my ex-dividend date. So here we are. It is the 14th. We have J&J pulling up on ex-dividend, going on the 17th. That's later this week. On the Thursday, right? So on Thursday, Johnson & Johnson goes ex-dividend. This could be a really good company to buy. Let's go ahead and look at J&J and LMT. So let's go ahead and pull in LMT and J&J. Those are both great companies to just kind of average into at any time. Except Lockheed Martin right now is basically blasting off to the moon right here. We had picked a little bit of shares up way back when it was kind of trailing below that 50-day, 200-day. Here we saw that 50-day cross onto the 200-day moving average. That was some negative for the position. You can see here it did have a false breakout and then broke straight down and kind of hovered in this area. So that's why I'm not trying to buy, trying to pick up Merck right now. We can see here it actually has that 50-day cross onto the 200, so this is negative right now for it. It could actually retrace down into the 72s. It can go even further into the 60s, potentially before it has some sort of a bounce back. So Lockheed Martin's off the block right now because it's just trailing at all-time highs. Johnson & Johnson here on the other hand, let's see here. We had that 50-day cross under the 200, 50-day crossed above the 200. This is actually showing signs of positivity. We have the golden cross, short-term cross over the long-term. The orange, the 200-day moving average is acting as support now, potentially, right? But this is just a good position long-term to buy, and it's not at highs. 180 is the highs right now in this position. If you look at the 10-year on J&J, look, it's going to have this fluctuation up and downs. But anytime you can buy this position below that 50-day, 200-day moving average, it doesn't stay there very long. Take a look at the 5-year here. You can see that the price generally trades above that 50-day moving average. There are times where that 50-day crosses onto the 200 and the share price falls quite hard. But here, where the 50-day crosses back over that long-term 200-day, you can see the share price just kind of bounces up and it does these little patterns. That's just the pattern. And here we go. We have that 50-day. If you look at the 3-month here, that 50-day just broke above that 200-day, showing positivity on that position. So you know what? I'm going to go ahead and focus on buying a bit more J&J. That is a position I really haven't bought a whole lot of in the short term, but this could be a good long-term opportunity to just buy it. It's a great company long term, and I'm going to go ahead and pick up some J&J. So we just kind of went over that. I'm not going into like the financials of J&J just because we've done that in the past. We can do that really quickly. I'm not sure if you guys are interested in that. Would you guys be interested in seeing these every video, or maybe not every video, right? So let's take a look here really quickly at J&J's revenue here in the purple. You can see the constant purple line moving to the upside. Earnings here in the green. So there was that 2018 dip. This is just something with like their company. Their net income kind of dropped really quickly, the EPS, but picked up really quickly and is just skyrocketing now going into 2022. So earnings per share is on the way up. We see their free cash flow in the blue, just constantly nice steady movement to the upside, and their net income staying consistent as well. So really, J&J, great little company here. You can see this is percentage wise. So percentage over the past 10 years. Revenue up 4% on average per year over the last 10 years. Their net income is up 10.6%. Their earnings now is up 13.2% on average. Big pull up. You know, it's basically shot up very nicely coming out of 2020, those suppression, and it's up 13.2% over the past 10 years on average. And net income in the orange up 10.6% on average. So overall, their financials look fairly good. I think they just raised their dividends slightly. We can see that their yield, their trailing 12-month yield is 2.5, right around that 4-year average. And their dividend growth rate's around 6%. And they've been growing and paying out dividends for the last 59 years. So there's very, very little chance that this company will just not hike their dividend, that they will cut their dividend. There's very low chance that they will not do it. So very strong roots on this company. So that is going to be our buy of the week, Johnson & Johnson for the win. So that is it. Basically, we covered all 5 areas. Number 1, we covered the overall performance of the portfolio. Number 2, the weekly performance. Number 2, the activity of the week. We had a couple of dividends. We did buy some stocks last week. We covered number 4, the current portfolio's dividend income. And number 5, we covered what stock we're buying, which was Johnson & Johnson, just because it looks to be having some positive momentum. Whereas other companies are trading near all-time highs, or they're showing some signs of continued fallout potentially going into the rougher markets here in 2022. So regardless, I just want to continue to buy every single week because I really don't know what the future holds. But the one thing I can control is that I'm going to continue to invest, and I have another some 20-30 years of investing to even worry about what the stock price is going to be at in the future. As long as the company is sound right now and has good long-term possibilities, it's just going to be a company that I'm going to buy, and that's J&J. Fits the role perfectly. So that is going to be it for this video. If you guys have enjoyed it, remember, go down below, hit the red button to subscribe, make it gray like this one, hit the bell right here, click all to be notified every time we go live, or we release a brand new video. Happens every single week here on the channel, and I will see you guys in the next video. Really appreciate you guys tuning in. Bye bye.